Hello everyone, I'm Jerry D'Ambrosio and welcome to this week's special presentation. Moving averages are one of the most commonly used technical indicators by both experienced and newbie traders and investors. They are used to help smooth out price data and eliminate noise. They can identify changes in trend as well as strengthening and weakening trends. Tonight, I'm going to revisit a technique that I introduced at the end of last year using multiple moving averages. But first, let's talk about some key concepts of moving averages. Moving averages are the favorite charting tool of many technical analysts, and for good reason. Crucial for swing traders, moving averages are among the most straightforward, simple, and reliable tools you can use to determine and predict a stock's direction. If you think about it, moving averages are the basis for several popular technical indicators such as Bollinger Bands, MACD, and stochastics. The two most popular moving average types are simple moving averages and the exponential moving average. The simple moving average is determined by dividing the closing prices for each day in the look-back period, while the EMA gives more weighting to the most recent prices. Therefore, if you plot both moving averages on a graph, as shown below, you'll notice the EMA hugs price a little more closely and reacts more quickly to price changes than does the simple moving average. 4 ways to use moving averages. Number 1, define and invest with the trend, whether it be up or down. And moving averages help determine how strong the trend is. The steeper the slope of the moving average or multiple moving averages, the stronger the trend. They help identify buy and sell signals. You'll know when the safest time to buy and when also to consider selling. Is the stock near support or resistance? See if your stock is finding support in an uptrend or meeting resistance. And is price extended? Determine if price is overextended and too far away from that moving average. What I'm going to share with you tonight are moving average combinations that are used for shorter term trading, swing trading. I think these moving averages here give you a perfect combination to predict the short-term price trend with high probability. And this technique is called the EMA squeeze swing trading strategy. It uses exponential moving averages because, again, it follows the price trend a little bit more closely, so there's less lag. And we use the slope of the 3 moving averages after a squeeze. I'll explain what the squeeze means in a moment once we get into some chart examples. We can confirm if a trend change is taking place and likely or not to continue. So here's what we look for. After a pullback or a quiet period, the 3 moving averages, again the 5, the 8, the 13 EMAs, start to rise, squeezing together before pulling apart in an upward trending slope. And the VectorVest RT indicator, relative timing, is very important. We want that indicator to be rising so that it reduces the possibility of a false signal. The 50-day moving average is added to the graph to confirm price is above an institutional buying level. The buy signal is generated early in the development of the trend. The sell signal early when the trend is dissipating. The relative timing is falling, the EMAs squeeze together, and then separate as they start falling. An early sell warning occurs when the trend is dissipating, evidenced by the fast and medium EMAs rolling over and squeezing together. When the fast 5-day EMA crosses below the medium and the slow EMAs, prudent investors will sell. So here are the buy rules written down. I always like to show any trading technique written down on paper. We'll go through charts here in a moment. But the buy rules are: price needs to be above the 50-day moving average, the 5-day EMA has to be greater than the 8-day EMA, and the 8-day EMA has to be greater than the 13-day EMA, and the relative timing indicator has to be trending higher. So those are the buy rules. The sell rules are the 5-day EMA closes below both the 8-day EMA and the 13-day EMA. So here's our first chart example. We're looking at Anthem, ANTM. This is a more recent example looking at the last 3 months or so. So as you notice, in January, February, stock's price was below the 50-day moving average. The 50-day moving average is in green. The 5-day moving average is in orange, the 8-day EMA is in red, and the 13-day EMA is in blue, and the relative timing indicator at the bottom. So during the beginning of this year, January, February, you could see price was below the 50-day moving average. And I'm going to take off price for a moment. You'll see how you really don't need price on the chart for this technique. All 3 moving averages are below the 50-day moving average. You can see how they started to squeeze together rather tightly here in the middle of February. They crossed, the 5 crossed above the 8 above the 13, and then you started to see the separation being created by those 3 moving averages. Right now, again, we don't need price on the chart to see that separation. That separation, or fanning, is really important in trade selection. So I'll put price back on because, again, we do need price to be above the 50-day moving average. You can see it closed above the 50 there, closed above the 50 there, closed above the 50 there. I'm going to take off price again. When do we first start to see that fanning action? When do we first start to see those 3 moving averages begin to separate? I would say right at the beginning of March. Relative timing, trending higher, and it didn't cross above 1 until March 4th. Let me zoom in a little bit closer here. And you can really see, I'll take off the 50-day moving average. Those 3 moving averages really beginning to separate further and further away from each other. So on March 4th, you have your setup day. What we look for the following day is confirmation. Okay, confirmation, price moving higher than the close of your setup candle, which again was on March 4th. So price did follow through the next day. And with this example here, Anthem, you'd still be in the trade today. Nice strong trend developing. You had a couple of pullback days here. But again, if I take off price, the 5 has never crossed below the 8. The 8 has never crossed below the 13. You'd still be in this trade riding that really strong trend higher. Here's LB. It's a retail stock. I'm going to create my date line. Now here, price has been above the 50-day moving average. It dipped below the 50-day moving average one time there, crossed above it here on January 28th. None of the moving averages, though, fell below the 50-day moving average, and that's okay. The initial signal is when price has been below the 50-day moving average for a considerable period of time. Remember that quiet period. And then crosses above the 50-day moving average. That's your first or initial entry using this technique. There are times when price is going to remain above the 50-day moving average for months and months. The stock will pull back, stays above the 50-day moving average. The 3 moving averages stay above the 50 as well, but you can see that squeeze happening here at the beginning of February. What we wait for, and you can see RT trending higher as well, we wait for that fanning action. We wait for those moving averages to begin to separate. And that happened right here on February 5th. We take the trade the following day. Price moves higher than the close of your setup candle. Again, relative timing above 1 and trending higher. Now, I know this happens a lot. It happens to me. I buy a stock and it falls the next day. It might fall for a few days after I enter the trade. However, I have a very systematic plan here in place. I am going to exit the trade if the 5-period moving average crosses below both the 8 and the 13. During this 3-day or 4-day pullback, that never happened. The 5 stayed above the 8 stayed above the 13, and we were able to stay in this stock and ride this trend higher and higher. Still in it as of today. Here's Autozone. Now this is one where price did fall below the 50-day moving average. You can see price was below that 50-day moving average for a good month or so. All 3 moving averages here below the 50, and then that squeeze happened, and then price began to rise. Crossed above the 50, closed above the 50. Now on that day, that wouldn't have been my setup candle because I'm not really seeing the separation being created by those 3 moving averages. Honestly, I'm not really seeing the separation until about right here, March 10th. I really want to make sure that I don't get whipsawed. I want to make sure that the emerging trend has legs to it. You could see the RT above 1 and rising, hitting higher highs and higher lows. So on March 10th, sure, maybe I gave up some profits there by not getting in earlier. But again, this is a trend trading system. We need a meaningful change in trend in order for us to take the trade. So on March 10th, we got the 3 moving averages separating. We got followed through the next day, and that was really the beginning of a nice strong trend, which we are still in as of today. And finally, here's PH. Another one here where price did fall below the 50-day moving average. Again, your 2 signals are either when price falls below the 50 and then crosses above the 50 after that squeeze, or price remains above the 50. All 3 moving averages remain above the 50-day moving average, but the pullback towards the 50 results in that squeeze of those 3 moving averages. The quiet period, the pause above the 50, and then the rise. So here, I'm going to take off price. Again, we really don't need it here. I see that squeeze happening right here in the middle of February. Didn't really see the fanning of those 3 moving averages until about February 23rd. Relative timing is rising. You could see hitting a new high than we saw back on February 24th. Price closed at 286.01. We got nice confirmation the next day. So we were able to ride that trend higher and higher. Now we did get an early warning signal, I'm going to zoom in here, of a potential exit. We didn't quite get the exit. It looks like the 5-period moving average didn't quite close below the 8. You could see they started to converge toward each other, but we'd still be in this trade as of today. Now, just going back to an earlier example for Autozone, we're going back to February of 2020. We can see on April 17th, on April 16th, price closed above the 50-day moving average. I'm going to zoom in here a little tighter. Relative timing was riding higher, and we really began to see those moving averages separating. Price was below the 50. Those 3 moving averages were below the 50. And here's where the squeeze took place, right at the beginning of April of 2020. Remember, we have to wait for price to close above that 50-day moving average. And it happened here on April 16th. I want to make sure those 3 moving averages are separating. They are. Relative timing above 1 and moving higher. It is. Our entry was the following day on confirmation, and we entered right around $1,000 or so. Now it opened at $1,006, and we were able to ride that. I'm going to zoom in all the way up to about $1,178. Let's see where our exit was. Now it wasn't here because the 5 didn't cross below both the 8 and the 13. Looks like it did right about here, June 12th. At about $1,100. So that's a nice 10% gain in just about a couple of months. And you can see what price did afterwards. Just flat, not really moving. Good opportunity to kind of just take your profits off the table, move on to the next trade. This is what's called dead money. If you're just sitting in a stock for weeks and weeks and months and price isn't really going anywhere and you have a gain, might be a good idea to take the gain, move on to the next trade. I mentioned earlier, folks, that this is a follow-up of this technique that I taught back in November. As you can see, I showed you guys some more recent examples. If the technique continues to work quarter over quarter every single year, we're going to keep bringing it to your attention. I really want to thank you guys for joining me here today. If that was the first time you've seen the EMA squeeze trading technique, I hope you learned something and will potentially implement it in your own portfolio. What I want to do now is talk about a course called Mastering Moving Averages. This course begins on April 21st. Now that's our first mastery class, our first mastery support session. And in this course, we talk about the VectorVest system, principles, tools, and different market timing systems that will help when trading moving average techniques. We're going to then talk about just understanding the different types of moving averages, trading with a single moving average, golden crosses, moving averages as support and resistance. We'll talk more about the EMA squeeze swing trading system, more multiple moving average trading systems, Dr. Barbara Starr's surfing the reversal waves. This is a fantastic short-term trading system. And then, of course, the Midas Touch moving average trading system, which uses moving averages on our stop price and relative timing indicator. And then we're going to give you guys a bonus trading system called high-low moving average bands. Some additional bonuses: you will have access to the VectorVest intraday program for the duration of the course if you don't already have it, case studies, and also 6 mastery classes. Now, Stan Heller, who is our VectorVest Canada consultant, he will be conducting the 6 mastery classes along with myself. And again, the first class begins on April 21st. Once you register for the course, and you can go to vectorvest.com/MA to register, you will have all of the core module recordings right away. You don't have to wait until April 21st to start watching them. We will get together on April 21st to discuss some of the contents of the first few modules. And again, there will be 6 mastery classes in total. The early bird rate for this course is $395. It is available today. The regular price is $595. So register now, save yourself $200. And notice the Pro Trader tool and the Auto Timer tool are included as well. If you have any questions or need any help, give our support department a call at 888-658-7638, or you can email them at support@vectorvest.com. On behalf of Stan, I really enjoy teaching this course, and we look forward to working with you again beginning on April 21st. Have a great weekend, everybody. Take care.